and welcome back to Monday Mortgage Live. For those that are tuning in, thank you so much for being here every Monday where you can catch your Monday mortgage news. And for those that are stopping in for the very first time, this is your cornerstone to get anything that's mortgage related, product related, or maybe you just want to know some tips about rates and where they're going. But today I got some good stuff for you guys. Today I want to talk to you guys about underwriters and loan officers. Not a versus, but what are the differences between the two? And this is a big misconception because most people are led to believe that a loan officer is the one that is going to approve the loan. And I understand that conception, if you will. You have a conversation with a loan officer, and a loan officer puts together a package, and they send you out what's called a pre-approval letter. And under your understanding, you are approved for the loan. And that is a very, very big misdirection. Cutting right through it, a loan officer does not approve a loan. An underwriter does. A licensed underwriter does. So let's back up in regards to licensure. A loan officer, when you speak to a financial institution, that's usually who you're speaking to up front. They handle the sales portion, they handle the structure of your loan. They are your main point of contact. It's a little bit different when you're dealing with a big box bank. You have mortgage bankers. There is a difference, and we'll do a video on that later. But in regards to your loan officer is going to be looking at all of your qualifications from income, your credit, and your equity. And based on those components, they're going to find the best program and product that best suits your needs, not only for the immediate effect of closing on a home, whether it's a purchase or a refinance, but for the long-term effects as far as how it's going to impact your family down in the future. That is the main role of a loan officer. Now, through the process, as I mentioned, they're your main point of contact. So any questions that you may have or updates, they'll probably be the best person you want to reach out to. Now, when it comes to underwriting, an underwriter, more likely you're never going to speak to an underwriter. And the main reason for that is an underwriter is making sure that the loan officer that prepared a file meets all the guidelines set by Fannie Mae, Freddie Mac, FHA, VA, or USDA. Their main role is to reconstruct the loan based under those guidelines. Now, if those guidelines are not met, for whatever reason, there's three ways really that file can go. That file can be approved with conditions, means an underwriter approves the loan but needs a certain amount of conditions to satisfy the structure of the loan. The other would be a suspense, meaning there's enough information in there for an underwriter to review, but not enough to give an actual approval. An example of that would be, in most cases, underwriters need at least 2 months bank statements. If an underwriter only received 1 month's bank statement, more than likely they're just going to suspend the file. Then you have a third option, which is no one likes to hear. It's a turn down and or a denial. And this is usually caused by the very beginning, a loan officer or mortgage banker, if you will, not structuring the file correctly. Now, going back to the underwriters, why an underwriter would ask for so much or when an underwriter asks for much, is because they have a due diligence to make sure that that loan meets all the criteria of back-end investors. Back-end investors can be your Wells Fargo, can be your Bank of America, can be even investors you've never heard of, such as PennyMac or even Freedom Mortgage. These are all back-end investors that have their own internal overlays and guidelines. Underwriters need to make sure that your loan meets those guidelines, meets that structure. For whatever reason, if there was some type of default on the loan or something negligent happened in regards to structuring the loan and approving your loan, then that lender or financial institution is going to have what's called a buyback, meaning they're going to have to buy back that entire loan, and no financial institution is in the industry for that. So that is one of the main reasons why an underwriter, not only to make sure that you're approved, but to also make sure that after you close, after you get the keys to your home, that there are no issues later on down the road as far as a default or negligence for that matter. Couple caveats in regards to loan officer versus underwriter. Your loan officer will be in charge of locking your rate, not your underwriter. There are some strategies to that, meaning if you have a very strong file going in, I highly recommend locking your rate before you go into underwriting. If you have a file that maybe debt ratio could be an issue and you could win off of a lower interest rate, you don't have to lock it before you go to an underwriter. As far as appraisals goes, an underwriter will review an appraisal to make sure that the appraisal is done correctly, make sure that the comps are within the respective distance that they should be. They review all this before they release it to a buyer. Last couple caveats in regards to underwriters versus loan officers. The underwriter is going to issue what's called a final approval. They will not issue a clear to close. They issue a final approval. Final approval means that they are done with underwriting. You no longer have to submit any more documents. You don't have to go look for your 4th grade report card, have to submit your blood type. That means you are officially done with underwriting, but you're not out of the woods yet. It means that you need to now get into a clear to close status, which is very, very seamless, but setting the expectations correctly. You have a loan officer who will structure your file. You have an underwriter who will approve your loan and ultimately give you a final approval. You have a closing department that gives a clear to close, and we will definitely be talking about that on a next video. I thank you guys so much for participating and watching. Any questions that you guys may have about loan officer roles and duties, or maybe underwriters in more depth, feel free to PM me, shoot me a quick message. I appreciate you guys being here this morning, and I hope you have a great start to your week. Thank you.